What's up, everybody? Going to do a real estate video. We're talking about real estate. I've been getting a lot of questions about real estate. And most of you guys, as you know, so I do trading, so I do the stock stuff. I also do real estate. Those are my two big things. As a trader, I take profits. I put them into my investment account. I buy other things, real estate being one of them. Also being a licensed real estate agent, real estate professional. I don't know why that sounded so weird saying that. Sounds very proper. You guys know my opinion as far as real estate agents go. I mean, I gotta be honest, we do fill in a lot of the blanks, but we do know the information. As much as I can agree with how easy it is sometimes to be an agent, man, have I seen a lot of people almost cost themselves a lot of money, especially for sale by owner that think they got it figured out because this is easy, I can do this, and then they're just way off. They're about to hand over their house to somebody else for just a ridiculous amount of equity just right off the top. They're just like horror stories. Anyway, that's nothing to do with what we're talking about now. I do got a bunch of real estate videos coming out. I do want to talk about all of it. The truth behind it, passing the test, how I feel about the test, how I feel about being an agent. You guys have already seen some of those videos on here, but in this YouTube channel, so it's Don Fron Trading, I get tradings in the name, but that's just where I'm going to talk about what I do from trading, what I do with that. That's the income stream, now how do I branch out and make that money grow? It's just an ever-churning thing of like, how can I make this money grow? And we're going to talk about real estate right now, because everyone's saying, like, should I buy real estate? Is now not a good time? Is the housing market going to crash? Interest rates are going up. Why are home prices still going up? And so interest rates have gone from, like, 1 to 6% for a mortgage? And, yeah, in any other market, we probably would have felt that. But we didn't. We didn't in this market. I mean, look at these. These are housing prices. Like, for the last year, Phoenix up 30%, Las Vegas 26.5%. Missouri's not on here, but we're just north of the 16.5% that Houston's seeing. Miami's 20%, San Diego's 25%. Like, that's, why would you invest in the stock market if you knew that kind of move was coming? It also gives we're seeing a lot of bubble headlines and crash headlines, and that's all that is. We're seeing a lot of is real estate in trouble? When's the crash coming? Because I think we're going to double down on the headlines later. Now, what we're seeing in this market, why we're not seeing this, there is just a lack of liquidity. It's listings. I'm going to get the stock brain out of here. So, with fewer listings, obviously, it's supply and demand. Less supply is naturally going to equal more demand. It's just how they scale to each other. So we're in a seller's market because there's just few of them. If these are your buyers, here's your sellers. Yes, there is 200 buyers for every one seller. And then, as you get fewer sellers, that's still that gap. It's that gap in there that creates that supply and demand and these fluctuations in price. If everybody were to just say, you know what, I'm throwing in the towel, I'm locking in the price on my house, and everybody dumped tomorrow, and then the Biden administration, they take all those foreclosures and release those, we'd probably see it flop on its face. There would just be a lot. What's holding a lot of this up, and I can speak for the area that I live in, so I'm in the Kansas City, Missouri area, so I'm actually just right where this 16.5 is right here. And I can speak for my last few transactions. They haven't been to people that pay interest rates. So while interest rates are going up, and that's a cool story and all, that's for people that were never really on the table anyway. I hate to say it, I get love letters from all these other agents. We'd love to work with you, and then the clients write letters to my clients like, here's why we would love your house. If you're doing that, by the way, please maybe handwrite it. Don't copy and paste it. A lot of them aren't even getting read. And you know why? It's because you have the old address on there. You couldn't even, update the address. It's the same love letter. Like, why your house is so perfect? Like, says everyone was perfect? Or maybe you're homeless. I don't know. So, pro tip, update the address. Pretend it's that house that you actually want to buy. But anyway, they're never on the table anyway because we're just getting... my last few transactions are all cash. They're from firms, investments. They're companies buying houses. That's it. They're buying real estate. And they're in the business of making their money grow too. The thing is, why I'm having this conversation now is I'm starting to hear, I talked to quite a bit of them. A lot of them are starting to say they're going to dial it back. They're not buying real estate. They've got enough in there. They don't need any more. And they see some headwinds, whatever the reason is, they're dialing it back. Now, when they do all stop, now investors will likely all kind of move together. This is my opinion. There will still be the occasional one that's still buying up houses. But the big ones, they'll likely all move together, and at that point, we will see the abrupt move of those cash buyers that are just holding this thing up. They're off the table. Now the people who are buying are the people who went from paying 1% to 6%, and most people when they're buying a house have no idea what they're actually paying. Like, I'm sorry, it just is what it is. They're not worried about how much that house costs. They're worried about the monthly payment. That's it. And we're already extending that, but I mean, that's what happens at car dealerships too. Like, it used to be, 60 months, then 72 months for a car. Now it's like 84. They're like, oh, you only want to pay $600 a month? We'll keep that car payment average, so we just extend it down the road. Millions of dollars for what used to be $250,000. Like, real estate's getting kind of crazy. So I hope they don't take the car route with that, just to make it more affordable. So they push it out even further. Go ahead and get an 80-year note on that house. Like, it's getting ridiculous. Some people won't even pay attention. They'll pay it anyway because they care about the monthly payment. But you will find out that you don't get as much house. 1 to 6% is a lot. Historically, 6% is not even that high. But when you go from 1% to 6%, you see how much house you could have had versus how much house you can buy. Now, that is when we'll see real estate. We'll see something in the markets. I wouldn't call that a crash. There is a perfect storm scenario where real estate does crash. It won't be anything like 2008, and anybody saying that right now has no idea what happened in 2008. We made a lot of put laws in place so that it doesn't happen again. Like, we specifically are watching out for that. That was cronyism. That was just crazy. They were just taking your money back in 2008. That was just chalked up to fraud. We're not happening. That's not happening anymore. But I will say, and this is me personally, when I'm looking to buy more real estate is when all that does come out. When the investors do stop. And we'll know because there will be a lot of housing prices plummet for the first time. They'll use exaggerated words. Plummet, crash, drop off. Like, oh, the sky is falling. You'll see those headlines. We see this in stocks day to day. Real estate, much slower. So it's not like this is happening tomorrow, guys. It's going to take a while. Their reports are just 30 days at a time. Like, here's what the average price is for the last 30 days. But that's when we'll see something. That's when the headlines will come. The housing bubbles finally popped, all that. At that point, that's when I'm looking, because a big problem we're having now and why we're actually so limited on listings is a lot of new home builders. New home buildings. There's just not a lot of new homes. We're not keeping up with this growth. So we're going to absorb a lot of this. So when everybody thinks it's going to crash, yeah, the investors might dial back. You're going to feel the effects of the interest rate rise. And that's going to stall, if not pull them back. So let's say Chicago rises another 10% next year, but this happens and things pull back 10%. Everyone in Chicago just stayed the same. They didn't grow that year. It's not like they're just hacking away at gains. They got to take away the growth they were going to see, because real estate's land always grows. What's the proper terms? The wood, the house on it. The improvements don't. But so you're going to naturally get that growth from real estate. So you got to take away that first and then dig into profits. So, we would need to see 30, like, if every house across the United States clean slate 30% off, Phoenix wouldn't grow. San Diego would lose 5%. Chicago, well, you'd be down 20%. And then the next year you would start to grow. You'd have to start digging that back. It's why real estate's always been a pretty good investment. And there's down years. It's a lot slower than the stock market. But just like the market, historically, things have come back. And the bear markets just don't last long. I'd call these almost, I hate to say that 2008 was a hiccup. In the grand scheme of things, yeah, there was a couple years you were down. It's an important conversation I have with all my clients now too, because I say, should we buy a house right now? We really need to move. We got relocated, this or that. We need to upgrade. We need to downgrade. Are you staying here for the next 5 years? Then what does it matter if your home goes to 1,000,000 or 100,000? Like up or down. If you're buying this because you need it, it's a necessity, but you can't afford it regardless of that price fluctuation because your mortgage is going to change. If Chicago all of a sudden grows 50%, your mortgage stays the same. If they get a cut in half, 50%, your mortgage still the same. So that being said, can you afford that house you're buying right now? For those of you guys that are worried about this, like, hey, like Dave Ramsey says, if life happens, at that point, can you afford it? That's where you'll get in trouble, because the last thing you want to do is be pinned in between a rock and a hard place. You have to sell your house, but it's down. For most people, this is the biggest investment they'll ever make. It's the first time they've ever bought something in the thousands or hundreds of thousands. Like, their car's the most expensive thing. That's it. So as far as that goes, if you're worried about that or the crash, it's going to stumble a little bit while you live in it. But if you're not worried about that, you're buying it to live, that's that. Investors, they have to worry about it because now they're worried about ROI. Is it just going to hang? But they're renting it anyway, and in a recession like that or a pullback, rent usually goes up. So investors can they'll still hang on to it for a while. Anyway, just want to kind of answer that question overall on a YouTube video. YouTube video, just to answer that in general for everybody. What do I think about this? Where do I think it's going to go? I think right now we are about to see that hiccup. We're about to see some turbulence, if you will. So it'll be interesting to see what kind of headlines, what kind of fear mongering comes after that. Anyway, I'll wrap it up here, and I will see you guys in the next video. Real estate wise, if you guys have any questions, put it in the comments down below. What questions do you have? What do you want to know about it? Are you an agent? There's a million agents out there. And if you are an agent, I think real estate agents are going away. It's going to be an app soon. How do you feel about that? I'll wrap it up here. I'll see you guys in the next video.